We talked about, just finished up with requests for references, and the thing I want to emphasize, these are called ancillary contract management issues because obviously they're not a hardcore issue of managing a contract. These are things that may happen along the way, and usually it's a good idea to know how to deal with them. And this is the first I've seen anything that deals with them. That's why I came up with this, so at least to give some recommendations, including try to change the slide. There we go. Or did we? Oh, we didn't get that one. All right. If a contractor believes an agency is pleased with how the contractor has performed under a contract, it is not unusual for the vendor to request a letter of reference. So we've recommended that when you think a vendor deserves to be praised, it's a good thing. It can have a very positive effect by, without being solicited, give them a letter of commendation that says, thank you for going above and beyond the line of duty. We really appreciate the extra effort, et cetera, et cetera. But sometimes they're going to come to you and ask you for a letter of reference. For instance, when we do a procurement, we always say, we like to see, for instance, 3 references from clients that you have currently, customers currently served. And when they're going out and competing for other states or for Maryland local governments, things of that nature, they may view having a contract with the state as a very attractive thing to use as a reference, particularly if they think you'll give them a good reference. So they may come to you and ask you to write a letter of reference. So either specifically, we're going to submit a proposal for Baltimore City to do such and such. So would you be willing to give me a letter of reference for the job we have done for you that we can submit for Baltimore City? And if so, they might give you instructions to specifically identify that this will be done for Baltimore City, the actual procurement. Or they might not tell you a specific one, but just ask you, can you give me a letter of reference to whom it may concern, etc., that we can put in procurements that we're responding to as we think appropriate. So, what is the answer? Generally, there is no automatic rule against doing this if the reference is carefully crafted. And this is what I've said a number of times. The prospect of obtaining such a reference can be a very valuable motivation for the contractor in performing the agency contract. So it may not just be about getting paid, it may be about these things that are above and beyond payment if they're doing good work and if they think that with you giving them a reference, that can help them win other business. So that may help spur them to do this, and if you indicate you might be amenable to that, if they do a good job, and if they do a job above and beyond the call of duty, that might help make the difference with them doing a superlative job. But even though there's no hard and fast rule, you should consult to see whether you have an internal agency policy. If you don't, consult with your attorney. You typically shouldn't take issues of this on your own responsibility to just do it or not do it. So get some guidance. If relative to a contract for which it is currently competing, a contractor asked to include a letter of praise, one you've already done, not for a written reference, etc. Now, I'm not asking you to give me a reference specifically, but just something you've already done without being asked. Can I include that in a proposal for another agency? The previous answer, no ground rules. Check to find out what you should do with your agency. And the other type of references that might request is one thing if it's a written reference, because obviously a written reference can be crafted, can be reviewed by assistant AG, can be reviewed by upper management to make sure it's worded very properly. But they may simply ask, can I give you as a reference for the vendor simply to call you and ask you how I've been doing, or send you an email? And so if it's not a situation where they're asking for a written reference or asking to use one you've already done, and they simply want to know whether they can provide your phone number or email address, then what you should do is, again, check internally within your agency and find out, again, what the ground rules are so that you know what you should or shouldn't say when you get that phone call, or if you should tell the vendor, no, you can't have anybody call me. And I guess the general ground rule is that you be factual and not volunteer a lot of information, but try to be very specific to the situation and factual. But you follow your internal agency recommendations. And if your internal agency doesn't have internal recommendations, maybe this might be the incentive for you to go to somebody in your agency and say, should we put some together? So that you have those guidelines. All right, participation in contractor surveys, etc. And occasionally I will get emails that because I am a world-renowned expert in this subject matter, and usually this is a generic email that doesn't even say what I'm a world-renowned expert in. So somehow they simply gotten my name. And so an email comes in and says, we would like you to fill out the attached survey. And I've even had a couple instances where if you fill this out and if you send it in, we will send you this nice little token of our appreciation in the mail. And right then, well, usually I don't read beyond, we would like you to do a survey. But especially if I read it and get to the point that, and we will give you a token of appreciation, I stop reading because, and not to say that you can't, but here's the general ground rules. So if you're asked to participate in a contractor survey, what I was just talking about was one that came in from someone I didn't even know. But here, if your vendor asks you to participate in the survey, find out why. If they are doing a survey, if, for instance, their internal auditing people are doing a survey to try to get a direct answer from customers as to how their staff is doing, that may be something that you want to participate in. If you think the reason for it is that they will use it to improve their performance, to gauge how they're doing, and if the answer isn't that they're doing real well, maybe use it for corrective action. So that's something probably you want to participate in. However, if in some way the answers could be attributed to the agency and possibly used for advertising purposes, the answers on the previous slides apply. In other words, you need to run by your agency policy or go talk to your assistant AG or talk to the Ethics Commission to find out what you should do if it isn't just going to be internal within the agency, is they're going to use that to say, and please note, the state of Maryland is delighted beyond belief with our performance, and that is testified by them filling out a 98 out of 100 on the survey that we gave them. That is a different situation. And under no circumstances should anyone in an agency accept money or gifts for completing a survey. So, and I think, all right, that's all I could think about on ancillary procurement issues, except that when I sent this to my assistant AG for her to critique, she actually came up with some other things that she thought I should include. And as of yet, I haven't included them, but when this becomes finalized, there will be a little bit more to that particular section than you have seen to this point. Not a whole lot more, but a little bit more. We've talked about this already in this class and in planning. That is the questionnaire for the project manager. I've talked about the 5-year experience clause, and this is something that we've included. I don't think you can read the version you have in your handout, correct? It's too light. But generally you have that as a standard clause for sealed proposal procurements, right?
Which clause?
The 5 years experience, state of Maryland experience.
Yeah. They have to go back 5 years.
Yeah. So this is generally the actual clause that we use. So, if you can't read it, can you read it?
No.
No.
The 871 was.
All right, that's what I thought when I looked at it. It was very pale. So, if you send me an email, except that I won't be around for a couple weeks.
All you gotta do is look online at one of our IFBs or RFP forums. This is there.
And even the people from Environment can look online at DHMH. Okay.
Or email me and I'll do a screen grab of the, just tell me when 871.
All right, let's see. Have you all heard this story from me before about the Washington, D.C. contract? All right, I'll go over it. It's only 4 slides. Information obtained from, I think it was the Washington Post, and this is back a while ago. This is on here because good contract management helps to avoid, this is the poster child for what you should not have happen. And this is like the worst case scenario of what could go wrong without good contract management.
I recall you talking about.
Well, I did in planning.
No, I think you did. But okay.
Well, it's only 4 slides.
Okay.
Washington, D.C. awarded a contract for a payroll system. They spent $20 million between 1991 and 2000. So for 9 years, they worked on this and spent $20 million. And in 1991, in 2000, they pulled the plug, they scrapped it, the entire system. The whole $20 million was down the drain. And they went back to what they were using in 1991 when they started the project. And in 1991, it was 9 years old, and now 9 years later, it is now, when they pulled the plug, an 18-year-old system. So it's 18 years old. The functionality is still obsolete like it was when they tried to get something better. They spent $20 million of effort to try to improve that went for naught. And to go back and regress to what they were doing in 1991, it cost them another $5.6 million to go back. So basically, it was about a $26 million failure, which we like to share things like that and just think, if you do it right, we get that much bonus in our paychecks. Just keep that in mind. And here's things that were actually published in the newspaper, and that's, you can, once I read them, you can see why they were noteworthy. Auditors said the city did not even keep a central file of documents related to the system, including contracts and a history of decisions. So there were nothing that anyone could go to, because one of the first questions is, if you spent $20 million and it doesn't work, can't you get some of it back? Can't you say the vendor didn't perform, and so if they didn't perform, pay back some of the money? And so when the auditors went to try to find out, all right, what was the vendor supposed to do, so we can find out what they didn't do, that we can go and try and get money back. Number one, couldn't find any contracts. Sort of hard to know what they're required to do when you can't find a contract that says what they're required to do. And since a lot of the issues were decided as you go, we talked about the Change Management Committee to decide what is appropriate for a vendor to do and not do. They couldn't find anything that documented what a vendor was supposed to do or authorized to do or told not to do. So basically, they can't find anything that says what's supposed to happen, so they had nothing with which to go back to the vendor and say, give money back. So that's part of the reason why they had nothing to show, because of the total lack of documentation. And someone was quoted in the paper as saying, and this is kind of obvious, the project was mismanaged by the city as well as the contractor. So not only did the contractor not perform, although we can't find exactly what they didn't perform as per requirement, but obviously if we have no documents, no contract, no decisions, we mismanaged it. And another quote, it was just a long story of not having the right people inside to manage the contract. We, in this case, Washington, D.C., didn't have people who were appropriate to manage the contract, and they didn't have the right contractor. So if you don't have the right contractor, that's what makes it doubly important to have good contract management. But if you don't even have good contract management, coupled with a vendor that is not a correct vendor, the result is $26 million spent for nothing. And just continuing the complexity of customizing a payroll system to those schedules, and there were 280 different payroll schedules, and rules renders any system useless. The city must simplify its pay schedules. Until this is done, no off-the-shelf system can be used. It will probably take up to 5 years to negotiate a simpler set of work rules and determine new computer system requirements. And which basically says that when somebody was making a decision whether they should procure a new system to do this, what they should have decided is, no, we shouldn't procure it to begin with, because none of the go signals were there. When in final analysis, it was way too complex to try to do. We didn't have a good procurement system to get a good vendor. We didn't have good contract management. And so the result is 26 million wasted. And here are the lessons learned of what not to do and what to do differently the next time. Okay, simple rules and things to avoid for proper project and contract management. These are from planning. And are these in there? I think you can read all that. So again, I don't know whether, but these are just some simple things we had there as to why things go wrong. So I'm not going to deal with them. You can read that. And this was a nice little story I liked, which is why it's in there. There once was an important job that everybody was asked to participate. Anybody could have done it and thought of doing it, but never got around to it. Somebody thought it should be done, but didn't do it because it was everybody's job. Everybody thought that anybody could do it, and anybody thought that if it was that easy, everybody would have done it long ago. It ended up that everybody blamed somebody when actually nobody should have been blamed by anybody. Another lesson for how things can go wrong. All right, legislative auditors. The legislative auditors generally audit agencies about every 3 years. The primary focus of these audits are, among the primary focuses of these audits are procurements and contract management. They always, what I've heard from the auditors is they know they're going to find something when they go and look at contracts and procurements and contract management. So it's fertile ground for them to identify something that kind of justifies their job. And so they always zero in on procurements and contract management, among other things. Since many state contracts run 3 to 5 years, often an audit will occur while a contract is still in effect. And the auditors will review payments made under a contract compared to the contract terms. So they are going to get a copy of the contract. They're going to familiarize themselves with the contract, supposedly with what is supposed to be paid when. Then they will get copies of your invoices and see what you have paid, and they will determine whether they agree that you paid appropriately. You paid what you should have paid, when you should have paid it, the amount you should have paid it, etc. And if they don't agree, they'll let you know. They will take an audit exception to what you have done. And if discrepancies are noted, the auditors will recommend various actions. And that can include even after the contract is over. The auditors have the right to see, I'm going to go more on that in a minute, to see virtually anything in the possession of an agency, even documents that normally are considered confidential. So you can't just say, nope, you can't see it because this is not subject to public disclosure, because by law, they are entitled to see almost anything. Now, if it is confidential normally, they cannot share the confidential documents or disclose it in their reports, etc., but they have the right to see it, and they can report on it. They won't give any details, but they can just say that having reviewed confidential information, they have determined still that there's some impropriety in what you're doing. And so even though it won't be available to the public, you'll still be docked for something that you haven't done properly. If the auditors believe that terms of the contract have been improperly applied or not applied when they should be, They will recommend strict adherence to the contract terms, plus actions such as these: seeking repayment of contractor overpayments or the withholding of payments to the contractor until overpayments have been satisfied. So if they think you have paid too much, if the contract is still going on, they'll either tell you to withhold payments or maybe simply ask them for a lump sum of the overpayment. If the contract is over, they're going to ask you to go back to the vendor and ask them to send you a check for what they say is the overpayment. And of course, the contractor is immediately going to say, oh, well, if your auditors agree that you have overpaid me, sure, I'll pay you back. They might contest it. But this is what the auditors will say if they think you have paid improperly. They frequently will zero in on liquidated damages because they know that's another area they can usually find something. If you had liquidated damages provisions and you did not invoke them when there were instances that were eligible for being invoked, they will write you up for not invoking the liquidated damages. So if you had them but didn't apply them, they're going to say you inappropriately did not apply it, therefore you did not get X amount of money that was due the state, and you should go back and get it. They at times will advise you to file a claim against the contractor. If it's over, file a claim to get it back. So this is what auditors can do. That if it isn't simply about money, but it's about performance, they can direct you to actually require the vendor to do what the contract requires. So they're going to write you up for not making the vendor adhere to the contract requirements. They might advise, I don't think I've ever seen this, but they could advise you to suspend work until deficiencies are corrected, i.e. we're not going to continue to pay them as long as they are doing subpar performance. So suspend work, have them get things up to par, and then we start doing services again. This I definitely have seen, and in fact our example after this is one of these situations where a contract is after the fact, they're saying go to the Board of Public Works and get approval retroactively for something that was done without the acquired approval. So if they interpret there was a change in the contract or an increase or decrease in the amount of the contract that was not approved prospectively, they will say go to the Board of Public Works retrospectively. Agency audit reports are distributed, so it isn't just between you and the auditors. They are distributed to the Audit Committee of the Senate and the Audit Committee of the House. So the State Senate and State House have audit committees, all audit reports, and you might get from the name is the legislative auditors. They work for the legislature. They don't work for the governor, they don't work for us, they work for the legislature to check what we're doing. And the reports go to the legislature for them to perhaps take action against agencies. They also go to control agencies. We get a copy of every legislative audit, as does DGS, do it. Board of Public Works gets a copy of all audits, and the governor's office. So it is disseminated. The audit reports are posted on the legislative auditor's website, and I frequently read in the newspaper where they will go review these audit reports and they'll publicize it. Like just in the past month, I think past month to 6 weeks, I have seen a very negative audit report about the Department of General Juvenile Services and one about the Department of Public Safety. So you read about it in the front pages of the Sun. If the auditors find what are presumed to be egregious errors that are being done by agencies. And if the auditors believe that something illegal has occurred, they will forward it to the Office of the Attorney General for investigation of possible criminal proceedings. And in fact, the one, excuse me, the one about 6 weeks ago from Public Safety, they did that. They found that a number of personnel somewhere in the Baltimore region for public safety were borrowing, if you put it in a positive sense, the inmate funds. Inmates have a certain amount of money that they are paid for doing work and things like that, And a number of people in the Baltimore region of public safety had a habit of helping themselves to the inmate funds. And so I think, if I remember correctly, 5 people were fired because of it. A number of them had other personnel actions. And I think that criminal charges were filed against maybe the 5 that were fired. So if the auditors then uncover this, if the auditors uncover something they think is criminal, they will refer it to the Office of the Attorney General for investigation and, if necessary, prosecution. Or turning it over to, I guess, the state's attorney office. I'm not sure who does the prosecution, but at least investigation. Whereas the auditors lack enforcement powers. They can't make you do anything. The people who get the reports, such as the governor's office and the control agency and the legislature, can compel you to do things. So as a general rule, most agencies don't like to have audit exceptions from the legislative auditors and try to do what they can to address them, and in particular try to avoid what are called repeat findings. Those are findings that you're written up for in one audit, and 3 years later when they come back again, supposedly the very first thing they look at for the next audit is the things they wrote you up for the previous one, to see if they find any repeat audits, and then they are elevated even more, that now we've told you one time and here 3 years later you're still doing it or not doing it. So that magnifies the second time. So findings of improper contract management acts. So findings of improper contract management acts or omissions are serious matters. But such findings can be avoided. Here's a simple little answer. You can avoid a finding of improper contract management by managing your contracts properly. So there's nothing for the auditors to find. Now, isn't that a simple little answer? Whereas fear of an adverse audit finding shouldn't be the primary reason for agencies to require proper performance in state contracts, avoidance of such findings can be a powerful additive incentive to agencies to do the right thing. You shouldn't, just because you know the auditors are going to come in, use that as your motivation to try to avoid having them write you up for something, but that is an extra added benefit or incentive, knowing that if you don't have proper performance, aside from the fact that you're improperly paying for vendors for what they're not doing, it might be highlighted for the public to see and your secretary to be embarrassed by if the auditors come in and find that. So generally, people try to avoid things that they suspect the auditors would write them up for if the auditors found it. So, any questions on legislative auditors? Now, here's some guidelines on, we've talked about contract modifications. Now here's some general guidelines on how to do them. How to negotiate them. A modification should clearly detail what aspect, singular or plural, of the existing contract will change. Most of the time, at the very least, there's going to change an amount. So if there's a change in amount, you will highlight the change in amount. Often, there's a change in the time frame. It's an extension, or it's shorter, or whatever. Highlight that. And if there is changes in deliverables, if you've clarified language, you want to say what it is that's being changed. Clearly identify. Often, aside from the total contract value, a modification only adds one or more deliverables and doesn't change any other aspect of the current contract. This is a typical situation that you focus on 1, 2, 3 things, and it may constitute 1.5 pages, whereas the original contract with 50 pages, the only thing that's changing is what's on that 1.5 pages, and the other 50, to the extent identified in the modification, doesn't change. Whatever the situation, the modification must be clear as to what both parties must do in the future, so that these responsibilities are added to the contract compliance checklist, since now they are part of what you are monitoring to make sure happens. And so if the contractor doesn't perform, you know that it's not supposed to get paid extra money for something that you now determine it's not doing. the modification must clearly be a change in some term or condition and not a repeat or insignificant variation of something that is already required and being paid for. If you remember, just, what is today, Friday? So Monday we were back here before? And you remember my little story about the Martin Public project and the $2.6 million modification that ended up being $802,000? And one of the reasons was that one of the submissions for the change wasn't a change. Two things were the same thing. One wasn't in the contract at all. One was no one checked the math. I mean, this litany of things that shouldn't have happened at all. So make sure you're not paying for something that is already a requirement that the vendor already should be doing. It is not something new. Unfortunately, and I will say this from experience, often when reviewing a modification, it is difficult or impossible to decipher what is changing in the contract. I reviewed a modification about, well, the one I'm thinking of right now was about 6 months ago from an agency. And I read it, and I couldn't tell you one thing that was changing in the contract. I saw that the vendor and the agency were agreeing that they were going to institute some changes that were not specified, and I saw what they said was the bottom line price change because of this, but I couldn't tell you one thing based upon that modification specifically that was going to happen or not happen. And the thing that I couldn't even tell was when the modification was effective. The only thing it had was when the two parties signed the modification, and they signed it on one date, but you couldn't tell what this undescribed circumstances, when it was even going to happen. And in this particular instance, to have a tie-in, the modification was submitted because the legislative auditors audited this agency and said, well, you are paying the vendor more or different than what the original contract called for. And so in discussing it with the agency, then they found out that the agency authorized the vendor to do something different than the original contract called for. So the legislative auditors wrote them up for it and said, now you need to submit a retroactive modification to the Board of Public Works. And I had a copy of the audit report. And I knew when the audit report said the modification started, I knew the dollar amount, bless you, that the audit report said was the impact of this change. And I'm looking at the modification, and again, there's not one word of when it's effective. The dollar amount of the purported change did not agree with what the legislative auditors said it should be. When I went back to the agency, they said, well, the auditors were wrong. They had the wrong amounts of what they said was at issue. And I said, well, how can I tell that what you have here is right when there's nothing here of what it is that's being changed? There's nothing I can check. And they started verbally telling me what supposedly was happening. And I said, this isn't supposed to be something where you tell me verbally. This is supposed to be something that anybody who reads this can tell what is changing. Because, for instance, how do I know that what you're telling me is changing is actually changing, or is the same thing that the vendor thinks is changing? There's nothing here to check in any way, shape, or form. And actually, that particular agency went back and spent 6 months trying to sort out what happened and just gave me the updated information last week of what the correct story supposedly is, because they had to find out themselves what they were even changing and when it changed and what the dollar amount was, and what they have resubmitted looks nothing like what they gave me 6 months ago. Not a good story. So that's why this is important. You need to be able to tell from the modification document what is changing, because that's what you and the vendor are assigning to. That's what you're saying is different. Somebody has to be able to tell what it is. And obviously a modification that doesn't convey what is being modified has not been worded correctly and shouldn't be approved. Just like I said, if I can't tell what's being changed, I'm not going to approve it, and you never should have sent it to me. And a vendor never should have signed it, because unless you supposedly have this deal worked out, and we don't approve deals that are worked out. We approve what's in writing if it makes sense. When writing a contract modification, and here's general rules. First thing, reference the original contract. Identify what contract is being modified. By name, effective date, contract parties. Contract between IBM and Department of Budget Management entered into on January 1, 2008 to perform such and such, the title of the contract. Reference if the original contract has previously been modified or had an option renewed. Example, reference the original contract as we set up here, then say as previously modified by modification dated January 1, 2009, modification 1, 2009, modification 2 dated July 1st, 2010. So you know that it's not just the original contract, but the original contract has already been modified, so you're modifying the original plus whatever's been changed before. And there have been renewal options, modified, and with the renewal option exercised on such and such. And then have specific language that confirms that except as specifically noted in the modification, the terms and conditions of the original contract or original contract as previously modified or renewed remain in full force and effect. So you were saying that aside from what is specifically in writing, nothing else changes. That's why it's so important that you specifically say in writing what is changing. So you know what's different. When writing a contract modification, specifically state all money aspects. The original amount, the amount of any previous modifications or options, the amount of the current modification, and the resulting total. So you start off with $1 million, and you had $100,000 for this, $100,000 for that. We're currently modifying by $50,000, so the resulting total is now $1,250,000 if this modification is approved. Depending on the volume of the text needed to describe what is being modified. If it's just one or two short things, put the specific activity being changed on the signature page or on that document that's being signed. If it's too large for that, have an attachment and have the language be in the attachment and have the attachment be referenced specifically. When attachment is needed because of the volume of new text, specifically reference and incorporate the attachment in the modification. And something I have seen, I shouldn't see, but I have seen, is on the document, the modification document that's signed, it'll say specific terms of the modification are described in Appendix 1. And then what is attached is something that's called Attachment A. And you go back to the agency and say, where's Exhibit 1? Well, it's right there. Well, no, Attachment A is here. Well, that's it. You don't have disagreement between terminology. If you say in the modification it's Exhibit 1, then the attachment should be called Exhibit 1, not Attachment A, because that implies there's something else. So, consistency of terminology. State how many pages are in the attachment. If the attachment is 6 pages, say Exhibit 1, 6 pages in duration. On each page of the attachment, list the page number and the total number of pages in the attachment. Page 1 of 4, page 2 of 4, page 3 of 4 to Attachment A. So it is at least a reference. There should be 4 in this example, and now here are the 4. Preferably, the signatory for each party should initial and date each page of the attachment to clearly acknowledge it as being part of the modification. So that if they initial each of those 4 pages, we know those are specifically the changes that are being agreed to by the parties. If it is simply 1 through 4, presumably that's what both parties agreed to, but at least one of the parties or the other can say, wait a minute, that's not what I signed to. It was a different 4 pages that I was agreeing to, not the 4 that you're showing me now. So that's not an absolute, but that's a nicety that they initial each page to indicate, yes, the language on that page is what I'm agreeing to. Negotiating contract modifications. Now we've just told you what should be there, how it should be written. Now we're going to tell you how we're recommending you go about it. The approach to negotiating contract modification is the same as for any type of negotiation. You are going to negotiate the modification. That's you and the vendor, back and forth, what to include, what not to include, the exact language, what you're going to pay. So in negotiation, here's the general rules. Start from a basis of knowledge. Know what you want. Know what is available. Have the other party, and these are what is the preferred way to do it, have the other party make the first offer. Have the other party document how it determined the value or expense of the offer, and be as precise as possible of what is to be achieved by the modification. Why are we doing this? What are we trying to accomplish by doing this? If the agency wants the modification, so we're continuing on this, what I just said in that previous slide. If you want the modification, typically what you'll do is ask the vendor to give you a proposal. So the proposal details what they are offering to do, and that's what you react to. And you might accept it, or you might negotiate and say you want something different, that isn't exactly what you wanted, but at some point you will get a proposal that you agree to, and that can be the specific changes that are referenced in the modification. So if they're giving you a proposal, specifically what they will do under the modification in response to the agency request in terms of, are they going to give you more personnel, different types of personnel, different resources? So number one, from the standpoint of who and what's different, what additional actions are performed, maybe the sequence of the actions, what is to be achieved, as much as possible, tie them not just to being paid for someone putting in hours of effort, but something to be accomplished that's a deliverable that will pay for that deliverable, time frame, and price. And how the price was calculated, hopefully broken down by action, resource, etc., so that you know if they don't do it, how much to withhold, if they do it, how much to pay, because all this is detailed. Have the vendor explain why it needs each person, software program, major piece of equipment, etc., included in its proposal, what that person or equipment will do, what it costs to employ that, how the results will be different if it was not used. If we say, nope, we don't want to pay for that piece of that software program of the price you have quoted, what is the difference going to be as far as performance if we don't allow you, Mr. Contractor, to buy that additional software program and charge it to us, so that you get some kind of ability to evaluate what you're getting and what you're paying for what you're getting. Don't simply accept whatever the vendor says. Challenge its assumptions. Ask it to provide references for something you aren't familiar with. So if they tell you that this is the way to do something and you really don't have enough information to know whether it is or isn't, tell them to give you some references of where they have done that same type of work before, and do what you always do with references. Check them for satisfaction, price comparison. Always check math. As per that 90,000 in the formula, we're back on that modification where we said they subtracted 0 from the new daily rate and it added up to $90,000 in overcharges. Check the math. I had something just 2 weeks ago that had 5 elements that were supposed to add to 100%. And the one vendor, when you added all 5 elements, they added up to 115%. And nobody checked it, including the vendor. The vendor was submitted for award, and this was a case where it was a commission payment, how much commission they were going to pay, and the vendor's commission rate was 35%. That was supposed to be substantiated by putting in how much they cost for profit, how much for overhead, how much for cost of goods sold, and one other element, and then subtracting that from 100% and getting the commission rate. They bid 35% commission rate, but when you did the subtraction, it came to 20%. And nobody checked the math. So what did they bid? Did they bid 20% or 35%? In that case, we determined they bid 20%. But you check the math always on anything. See if anything that is, and this is a repetition, individually itemized and price seems to be part of something else that is itemized in price. And I will let you know a little secret that I can let you in on now because it occurred more than 14 years ago, and I think the statute of limitations is over. But whenever I was here at DHMH, and as Chief of Procurement, I headed the division that Gary now has the same and larger now, and I would submit budget requests. And so what I would do is I would always detail very specific things. So much for photocopying to do this activity, so much for this thing for this activity. So I'd identify it and detail it, and then I would still ask for my general amount for certain categories. So I would still ask for my last 3 years average of photocopying expenses, my last 3-year average of this other thing, that were augmented by the things I specifically identified. And I'm almost always got both the requests for the average expenditures plus the things I had detailed, when actually the things I had detailed went into the averages. So I kind of got double allocated at times. But you didn't hear that from me. And since I haven't had the ability to do that for 14 years, I can probably mention it to you. But that's just an example. If someone would have checked and really delved into that deeply, they might have said, well, yes, it's nice that you're doing this, but shouldn't that be subsumed into the overall general average instead of giving it to you above and beyond? And I probably would have said, yeah, but no one asked. So I got what I asked for. Anymore, you don't get any money, so it doesn't matter. Let's see. Try to find independent means to verify the reasonableness of the pricing, and even if you can't find any errors or seemingly duplicate entries, ask the vendor if the price quote is the best it can do. Are you sure you can't go any lower than that? And you don't have to say, I've checked and I know you can. You can say, oh, I don't know. And you can say what is on the next slide here. State that the modification must be both affordable and seem reasonable for the agency to agree to it. So number one, unless I think it is a good deal, I'm not going to sign off on it. But also say, I'm not the only one who has a say in this. So number one, it has to go elsewhere within the agency. It needs to go to that Gary Goldberg. It needs to go to budget. It may need to go to the deputy secretary. It needs to go to the assistant attorney general. So all of them need to approve it. So you're not just trying to convince me. And then if that isn't bad enough, then it's got to go to the big bad DBM. And you know them, they're the guys with the green eye shades, and all they're looking for is trying to save every penny they can. So gee, you don't want to send something that isn't totally appropriate down to in DBM, and then it has to go to the Board of Public Works. So yeah, even though I'd be okay with it, it's got to go to those other places. So really make sure that you have given me the very lowest price you can. And hopefully they will. And state the obvious, the better the pricing is, the more likely that approvals will be obtained. Still on the subject of don't simply accept whatever the vendor says. If there is a substantial expansion of contract activities, you're going a very big difference in what you're asking the vendor to do. This is something that you may do. Don't just pay the same rates. If you have unit prices and you're going to give them a lot more business, then hopefully you can try to negotiate lower prices because now they're getting more volume than what those prices originally were predicated on doing. And so hopefully they can lower their prices in something that expands the amount of work. So where they might come and say, we're going to hold the line, we're going to let you have all this new activity for the same price, maybe that's allowing them to make a mint on the new activity. So challenge them. Unless you know categorically that you're already getting below market pricing and it's a good deal And so you should take them up on it. So unless you know you have that situation, then try to get a lower rate for the modification. And if you are sure the available funding is inadequate, provide to the vendor the amount of money and ask them what they can do for that amount if you think what you have is inadequate to do something fully. All right. I want to tell you a little story, but I wanted to, let's see. So all that's if you ask for a modification. Conversely, if the vendor asks for a modification, ask the vendor why it wants the modification, how the agency would benefit from the modification as they have proposed it. And I'm sorry, but I'm always a little skeptical when a vendor comes to me and wants a modification, because I'm thinking they're not coming to me for my own good. So they're coming to me for their own good, and I want to know why what's good for them is good for me. If the answer to these questions seems satisfactory, then ask for a proposal and follow all the recommendations for agency-initiated requests, what we discussed in the previous 6 slides. And I gave you the one example about D.R. Mason when they came and asked for the modification, and in actuality it was a claim. And I can think of another example where a vendor went to an agency and requested a modification. In fact, I can think of a couple of them where they wanted to change from a unit price contract to a fixed price contract. And when you check into it, the reason they wanted to change to a fixed price contract was because they were getting less volume than they expected. And so because they were getting paid the fixed unit price, they were getting less overall money. And they coincidentally wanted to change this to a fixed price so the agency wouldn't have the problem of having to deal with checking the math and checking the accounting and seeing what was actually done. So it would ease the administrative burden on the agency. Oh, and by the way, I won't emphasize the fact that the fixed price just happens to be more than what they've been getting with actual quantity at the fixed unit price. So basically, it's a way for them to get more money. So 2 instances where that happened, we just turned it down because, no, this is just a kind of not too subtle way where you're asking for more money. So vendor asks for it, then typically you have to be very skeptical. Now, I'll tell you my one little story. And that was a time when a particular agency, and we found out this because we went to a meeting with this agency and a vendor concerning some kind of a modification. And right before the vendor was ready to come in for the modification, we were handed a letter the agency had sent to the vendor that, in so many words, said, we have $950,000 to spend on this modification. Is it enough? And we basically cringed. It's like, you didn't. You're telling a vendor before you even start talking to them about modification, not only how much you have available, but even implying to them that since we think this may not be enough, it's inviting them to come back and say, no, it isn't. And so, not surprisingly, the vendor came back with a response that was just a little bit below that amount that the particular agency had said was available. And the agency wanted to know if we were okay with the modification, and our answer was, you go back to the vendor and you have them detail how they came up with that price. I want to see in writing every justification for the price they came up with. About 10 days later, something like that, we got that, started looking at it, and as usual, we found discrepancies and inconsistencies in the process of telling the agency to go back to the vendor and ask them to justify this and say, how is this not different? How is this not the same thing as this other thing? And wait a minute, this seems to be a rate increase. That coincidentally, very shortly, they discovered they had made an error and they offered like a $90,000 price reduction. And even with that, we still said, that's fine, but what about these other issues? So when it was all said and done, that we approved something that was more than $200,000 less than what the vendor had first submitted, because they thought that when the agency said, here's what we have available, and if they simply came in with $25,000 below that and said, that'll do it, that they were going to get by with it. And They didn't. And in the process, we saved more than $200,000 simply by challenging, and they still did the work for the revised amount. They just knew they had to get more serious. So that's my little episode. And you don't say to a vendor, here's what we have, is it enough? Okay. Do you agree with that?
Yeah.
Okay. We don't need to go into that, so I think, all right. I just want to point out, you can read those if you want. Those are just one of the premises we said about why you need contract management is changed circumstances. So we just gave you a number of changed circumstances that resulted in us having to do extra effort to try to manage contracts under changed circumstances. So I'm not going to detail all that. Now here's something that we have added to the planning class, and if you took the planning class you didn't see this because we added it after the planning class, and it's here as an attachment because these impact on contract management. That's why we're saying in planning that you should focus on these to identify if you want these to be in your solicitation to begin with. And now here's the emphasis that if you have them, just then make sure they're done, make sure they're kept current, etc. And I will just touch on these briefly. For major procurement contracts, there are plans that should be prepared in advance by the state or by the contractor after it is selected for award. Contractor plans should be approved by the state. All plans should be continually updated due to changing circumstances. For each procurement, the agency needs to decide which of the following plans to require, all, some, or none. So agency plans, here's some that we suggest you might typically have for major contracts. You're going to want a project management plan. You should probably have a procurement plan and a contract management plan. So you'll notice the difference between project management and contract management, and procurement is what happens between these two parts. And part of contract management is selecting the state contract manager, the person that will monitor. And we suggest you have an evaluation plan, and that is a plan to specifically evaluate each of these. And were they done properly? Did you do them as you expected? Are there ways to improve them in the future? So then we go and tell you some details, and I won't go through this, but this is what we suggest in the contract management plan, and this is what project management is, what, when, how much. And actually, this is one thing I thought was a nice little example to hopefully illustrate the difference between project management and contract management. And it was simply, if an agency is moving, you may have a contract for a vendor to do the move, but going through, I don't know, maybe 8 or 9 or 10 slides, it talks about all the things that are necessary in addition to simply having the vendor come in with moving vans to do moving, and hopefully illustrates the one is contract management, but the thing that's more expansive is project management. So you can read that. Procurement plan, how do you get to the contract award? So this is what is involved in the procurement plan. The agency contract management plan, which is the specific focus of this class. And these are things involved in contract management. Startup, contract compliance checklist that we've talked about. So you can read that. Invoice approval plan. So this is something we recommend that you look at these couple slides and look at the issues that you should make decisions on relative to payment of bills. So there's about 3 slides on that. Transition plan. And as per your question, whether any type of transition will be required if the incumbent wins the successor contract. So, i.e., are requirements under the new contract so different that even the incumbent needs to take action to meet the time frames? When transition meeting occurs? How long before the expiration of the current contract transition should commence? So these are general things that happen about transition for you to be concerned about in the transition plan. Just things that you can look at. Closeout plan, as we've detailed earlier today. renewal modification plan. You can read that. And if this were planning, we would go through these in detail, but supposedly this is what we look at in the planning class. Remediation plan, these are the kind of things you look at if you have to have a vendor come back and give you an improvement. And then the things that what I just went through were the plans that you as the agency should prepare. And here's the plans that you should have a vendor prepare. And so it's identify the major plans that you want from the vendor and when they should be provided. In their management plan, their startup plan, their staffing training plan. So how they're going to hire the people to begin with, maintain the staff they have, replace staff whenever there's turnover, continually retrain, all those things. Those are frequently things you want from a vendor in terms of how they're going to perform the contract, their closeout plan, and I think that ends it. You do not have this. This is up on the screen, and I'm going to walk you through this and try to give you the full flavor of this wonderful little situation that I was involved in for a couple months, and Gary and friends were involved for more than that because they did things prior to coming to me, and we had a little impasse at times about what the answer was. So this all started, just like the one I said not too long ago, with legislative auditors. And I know you can read that exactly off the screen. So let me try to read it.
Before I got here.
Yes, and before Gary got here. So I will, this is the legislative auditor finding 15. Medical care program, medical care policy administration. Authorized $230,000 in contractor payments that were not provided for in the contract. Additionally, MCPA did not require the contractor to perform all cost settlements. Now, I'm not concerned about this. Here's the issue. $230,000 in contractor payments that were not provided for in the contract. So what the auditor said is medical assistance program paid $230,000 more than they should have. Analysis. Authorized the payment of funds to a contractor that exceeded the contract amount by $230,000. Additionally, they did not require the contractor to perform, well, the cost settlements I'm not worried about. And they went back and said, and this was a 2008 audit or a 2007 audit? Do you remember when the audit was? All right. It specifically dealt with fiscal years 2004 and 2005. That's when the overpayment occurred. Specifically, the contract cost proposal established a maximum payment amount for each year. So it said each year of the contract, according to the legislative auditors, there was a maximum amount the contractor could be paid. And it said in these 2 years, they were paid more than the maximum established. And again, medical care programs or policy administration indicated that a revised staff level mix for the contractor was approved. So we did a modification. So what they did was okay, and what we paid was okay. Which resulted in the payments exceeding the maximum. The contract stipulates that the total billable cost may not exceed the total amount authorized in the cost proposal, and this revision was not submitted to the Board of Public Works for approval. State regulations require that Board of Public Works approve, the Board of Public Works approve contract modifications that change the amount of the contract or any cost component by more than $50,000. And so it's saying you overpaid $230,000, and I think if you go to the bottom line, does it say, so go back to the Board of Public Works to get approval? Is that in this?
No.
All right, but that's the bottom line. They said, a recommendation, here it is. We recommend that medical care, is this policy administration? Anyway, obtain Board of Public Works approval for the additional costs, and we won't talk about that. All right, so that's an audit finding. And actually, don't we have that in here? what is at issue is a contract that was awarded in 2000. It was a contract that was supposed to be over in 2005. And the audit, all right, again, I don't have here, I just took excerpt from the audit, so I think it might have been a 2006 or 2007 audit. So as you can see, it's going backward in time. And the contract, by the time the legislative auditors did the audit, the contract was over. And final payment had been made under the contract. And now the legislative auditors are saying, go back, not go back, go to the Board of Public Works and get them to approve the $230,000 that you paid in excess. Now, just because the legislative auditors say something doesn't mean an agency is going to agree. So in this particular instance, what medical assistants did was go to their Assistant Attorney General and ask their Assistant Attorney General to interpret the contract and see whether their Assistant Attorney General agreed that the auditors were correct, that they had overpaid. And their Assistant Attorney General said, no, I don't agree. You did not overpay. You did exactly what the contract allowed, and so DHMH took an exception to the legislative auditor's exception. They said, legislative auditors, you're wrong. We did not overpay. Our Attorney General said so. Legislative auditors took exception to the exception of the Attorney General to their exception. In other words, we think you're wrong. No, we're not wrong. We still think you're wrong. And so what the legislative auditors said, and this is, they do this kind of thing in trying to decide whether they do their final audit. So this is before final audit findings. So this was part of the back and forth. So what the legislative auditors said, well, okay, DHMH, you go to the Board of Public Works and ask them for the opinion as to whether this is something that should come to them. And so, I don't know whether it was Gary himself or who went to
I think it was somebody from
Medicaid, went to Mary Jo Childs, who at that time was the counsel to the Board of Public Works. Well, because at that time they had no procurement advisor, and now Mary Jo is the procurement advisor to the Board of Public Works. And what she did, without, I think, delving into every last detail, was based on the general information. She said, yes, it should come down to the Board of Public Works. And so, since this was for auditing services, which is what this was, it is a service, which means if it goes back to the Board of Public Works, it comes through DBM on a DBM agenda. And so the first thing that happened was I was asked whether I had an opinion as to whether the auditors were right, or medical assistants was right, or Mary Jo Childs was right, or whatever the situation was. And so I got a copy of the specifications in the contract. And to put it mildly, for a period of several days, for the most part, what I did was scratch my head and say, I'm really not sure what the rules are. I don't know what was supposed to happen. Now let me try and give you some details. So let's see, and in the future we'll probably have this more succinctly broken down so it's easier to follow. What happened since this was auditing? In the price form, the vendors were told there's going to be five categories of labor. You can give us a manager, a supervising auditor, a senior auditor, a junior auditor, or an entry-level auditor. And what the vendors were asked to do is, by fiscal year, 2001, 2, 3, 4, and 5, give a price for each of these categories. And this was one of the vendors, $96 for the manager versus $46 for entry level, and it went up to $99 and $52. Now, distribution of hours by auditor classification for each contract year ending June 30th, the distribution of hours is duplicated in Exhibit 1. Exhibit 1 is to be submitted with a technical proposal. So that's giving some information, which as of yet it's not clear what the information is. Now here's the important thing, one of the important things, and I'll read it and you tell me whether I need to read it again, since you can't read it off any of the screens. Can you read that at all? Oh, okay. Please note, so please, they're being nice about this, that the breakdown as presented must be followed in order that the state receive the number of hours bid. If deviations are anticipated, the contractor must explain the reasons to the state and receive written permission before the changes are initiated. The state will not accept any number of hours less per year because of staff mix changes. If, however, a staff mix change is approved, the state will pay no more than the total amount of total billing costs for each of the various classifications of staff. All right. Do you want to read that again? Because that is the whole crux of the issue right there. What does that mean? That was not explained anywhere else in the document. Nowhere else in the RFP did it say, what does that mean? And when I first read it, and I think when most people first read it, it's, what does that mean? I don't know what it means. So, all right, well, I don't know what that means, so let's keep looking. Now, we have prices for 5 categories. We have prices per year. We have that statement. Okay, so moving down. Now we're starting to, and here's another thing. When the audit hour mix does not match exactly the category below, round up to the nearest category hour, i.e., and what the vendors were supposed to do, it was stated here that they might be asked to provide anywhere from 48,000 hours per year to 72,000 hours per year of total labor, total auditing services. And so if it was something, and what, if you can move down again, what this is supposedly saying, and again, you had to interpret this because there was nothing more of an explanation than this. Since it is listed in from 62 to 64 to 66 to 68 to 70, if the number of hours was not exact, then it'll be rounded up to the nearest category. So 62,100 would become 63,000, and 63,800, if that's the actual number of hours provided, would round up to 64,000 to get to the not to exceed amount for that total. I mean, this is the way we interpreted that this was, because you have no more specific explanation than just that. All right, so moving down. And then it said, for purposes of comparison for award only, the cost quotation was based on 60,000 hours. So even though we're going to ask for prices from 48,000 to 72, we're going to make the award on 60,000. Okay, moving along. So, and this is just 42, 44, 46, 48, 50, and moving down. This was the one on the next page, 52 to 54 to 56, and these are 42 to 50. And so all this says this, and so what you're coming to is for each year, a total according to the number of hours, the breakdown of between the 5 labor categories, and the price that the vendor bid. And what the auditor said was, if you go to the 60,000 level, let me see, I think what they said.
There's 2 60,000 levels. Here's one.
Okay.
3,812,000.
Yeah.
And here's another. 4,059,000.
Is that for the same year? Or is that for a different year? Oh yeah, that it gives the year here.
Okay.
So you had prices for each level for each year. So this is kind of complicated. And what seemingly was the answer, seemingly, and what the auditor said, and what after poring over this and frankly agonizing over this, and having multiple discussions with Gary and multiple discussions with people from the medical assistance program, and I don't think I directly talked to their assistant AG, but they were funneling the answers to and from their assistant AG. And I basically came up with the same interpretation that the auditors did. And what we interpreted was that all this wording that I read to you what the wording was, and you could get as much out of it as you could get out of it. A couple other complications. Supposedly this was a fixed price contract. Now, does anyone from what you've seen there, do you think this was a fixed price contract? Ain't no way this was a fixed price contract. So number one, it was identified improperly by the type of contract. Number two, here's the instructions for the financial proposal. Cost quotation were based on the hours of audit time per year. Should be noted there will be only one billing vehicle, and that is the hourly billing rate. These rates should include all costs associated with the contract. Specify personnel classification hourly rates, the number of hours per year by auditor classification, the total billing cost per year by auditor classification, the total bid cost per year, detailed delineation of hourly rates, number of hours. So this is the only explanation in the financial. So all that fine print detail on the price form is not described in the pricing document. And I don't want you to bring this into play yet. All right. So the issue seemingly, the way the auditors interpret it, the way I interpret it, you want to scroll down a bit? Or scroll up, I guess I should say. Get back to some of the pricing information. The way I interpret it was that given the breakdown in the RFP of supposedly the ratio of what percentage of work to be done by manager, what percentage by supervising auditors, what percentage by senior auditors, percentage by junior, percentage of entry level, that for each hour of effort category, you had a breakdown. You took the hourly rate that they bid times that ratio, and if it was 10% of 42,000, for instance, for the manager, then you'd have 420 hours multiplied times the hourly manager rate to get a total. And so doing this, supposedly they came to using the hourly rate, the number of hours, and the percentage that you were supposed to use of each of the labor classifications. According to the auditors, this established a maximum amount that could not be exceeded for that category of hours for any year. So if they did in this particular year, whichever one probably says up there what year it is, if, well, somewhere is going to say it. Oh, fiscal year ending June 30th. So we're now in the fiscal year ending June 30th. For all the information from here till the next one is for that information. So what they're saying is if you had 52,000 hours, the most the vendor could bill was $3,897,000. That amount was the most it could build for 54,000. This is the most it could build for 56, the most it could be billed for 58, the most it could build with 60, billed for 60, and this was the basis for award 60,000. And what the auditors said and what they validated was that in 2003, 2004, or 2004, 2005, whichever it was, the vendor billed more than this bottom line total, and the reason they billed more than this was because they had a higher mix of higher price auditors than lower price auditors than supposedly was in the model in the RFP. And so what the auditors said was, if you can scroll up, keep going until we get to one of those footnotes. Let's see, keep going. Keep going. Keep going. Keep going. All right, right here. If a staff mix change is approved, the state will pay no more than the amount of total billing costs for each of the various classifications of staff. So the interpretation was that each of those amounts for each of those levels of effort for each of the fiscal year was a cap. That supposedly, and this is by inference, if you're trying to rationalize these things, supposedly was done to prevent the vendor mixing this. That whereas we had said they're supposed to have a certain ratio of manager to supervisors to seniors, etc., we did not want them to, after they got the award, basically stop using the low price people and use nothing but the high price people, and thus charge us for high price people when the award was based upon a specific ratio, including a substantial number of lower price people. So supposedly the interpretation of the auditors, which I ultimately agreed with, was that's what this wording said. And believe me, had to go through that and think and look and compare different parts of the document and look for stuff and talk to people and find out what else there was before you came to the conclusion was, well, it's more likely that that's the answer than not the answer of what those words meant. But the thing that to me was obvious was anybody reading this back when this was first issued, how in the world did they know what that meant? Now, very possibly they knew what it meant because somebody explained to them what it meant. But when the auditors said, this is something where you've overpaid by $230,000, and the people who were around at that time, 6 years after or 7 years after the contract was awarded, went back to the contract file, and there's nothing there that kind of explains what this stuff was meant. So if looking at it on its own words, on its own merit, it was very dubious as to what the intent was. And so ultimately, it did go back to the Board of Public Works. Well, actually, I'm going one step. I'm going from 1 to 3, and I haven't passed 2 yet. So many of you are looking properly confused because this is confusing wording. And the example that we're going to use this for is if you were doing a contract compliance checklist, which we recommend you do before issuing a solicitation so you have how you're going to monitor it, hopefully when someone is reading this and trying to construct a checklist, number one, either they're going to see that they don't know what it means, or they're going to, through the checklist, interpret what it means, but hopefully in the process we'll see the ambiguity so that once they've done the checklist, they will go back and straighten up the words so it's clearer what the intent is. All right, so now the auditors have said it should go to the board. The advisor to the Board of Public Works has said it should go to the board. I said, as far as I'm concerned, it's more likely it should go than it shouldn't go. And at that point, said, okay, we have a magic solution. Back in 2003, the contract manager wrote a letter to the vendor that says, let's see, the program has reviewed your request and will grant a waiver of the staff level mix for the period July 1, 2002 through December 31st, 2002. We'll also grant a staff level mix waiver for the entire year for non-traditional services. For the traditional services, something, and we're like, traditional, non-traditional, what is that? But in so many words, they changed the ratio of what the vendor could provide. So number one, intern was not in the price form. So entry level is less than in the price form. Junior is more, senior is more. Combined percentage between the supervisor and managers. They basically agreed to change the ratio versus what was in the price form and what was supposedly vendors were bidding under. And it went and it said, okay, that's in effect now and is signed by, and we should blank that out also, signed by the contract manager. So what I was told was the contract was modified. The contract was modified to let the vendor do what the auditors were now saying was improper, and since the contract was modified, to let them do what they did. It was properly paid because it was modified, and what they did was okay via the modification. Does anybody have any comment on that?
Yeah, I do.
You do?
When I first learned about this, the contract was over. So my question was, did we exceed the contract amount? And we did not. So the Board of Public Works had approved a certain contract amount. They didn't approve it by year, they approved a certain contract amount. While it was true that the auditors had shown that in the second year of the contract it was exceeded, it was not exceeded in any of the other years.
Well, in 2 of the years it was exceeded.
2 of the years it was exceeded. It was not exceeded in any of the other years. So to me, this was no big deal. And I didn't look at it as something that we all had to spend hours and hours and hours to figure out. I'm glad Joel did that because I don't think anybody understood it until he did it. So that's my comment. I didn't spend time doing this. I just said, did we get taken or not?
And that goes back to the issue of, if you start with the premise that there's a reason for words to be in a document, then, and I admit, there are times you find out in the final analysis that the words shouldn't be there. They don't add anything, or they detract, or they confuse. And if you find that out, hopefully you do it before it's issued so you get those words out of there. But if a contract goes through and is signed, then you try to actually give some credence to the words that are there. And I did agonize many hours. And I talked to some people on my staff, and I talked to my assistant AG and trying to go through this. And so the question was, and admittedly, bottom line amount that was approved by the vendor, by the Board of Public Works, was not exceeded. Because even though for a couple years they overspent, for a couple years they underspent. And so they didn't exceed anything, except the auditors were saying it wasn't just the amount in total, it was the amount in total plus the amount year by year. And so in 2 years, their allegation was that according to the contract language, the vendor exceeded what they were supposed to. They shouldn't have been paid. And despite not going over the overall contract amount, they still were overpaid $230,000 according to the words in the solicitation. And here we are after the contract is over, several years after the contract is over, after all payment has been made, trying to figure out what do the words say, should it go back to the Board of Public Works, and if it goes back to the Board of Public Works, the Board of Public Works can do one of two things. They can approve this retroactive submission, which means they will make all of this voidable, or they can refuse to do it. And if they refuse to do it, what that means is, in this case, DHMH would have been required to go back to the vendor and say, $230,000, please. How soon can you hand it over? Which obviously would have gotten into a very sticky situation because the vendor felt they did what they were required to do. Plus, then they came back to that modification. So do you want to focus on that modification again? Is there anything about this modification that strikes you as perhaps a little bit out of the ordinary? Does it look like a modification document? It was signed by the contract manager. Who was allowed to do modifications? Procurement officer. In this case, the procurement officer was unaware of it. The assistant attorney general was unaware of this. There was no approval within the agency. It was not submitted to DBM. It was not submitted to the Board of Public Works. So this quote-unquote modification was an improper modification. So what supposedly both parties were hanging their hat on was something that wasn't legal to begin with. So because the modification was not properly approved, then still the state could have repudiated this whole situation and could have gone back to the vendor and asked for $230,000, more than 3 years after the contract is over and final payment has been made. And all because, number one, unclear requirements. So when somebody reading this thing after the fact, who was not involved, just reading the words on paper, it is not clear at all what was intended. It is not clear that the vendors understood what was intended. It's not clear whether they were bidding on the same basis, all the vendors. It's not clear whether the vendors, the contractors, should have been approved for the payment of the various amounts of money. Because when you get right down to it, I have a hard time understanding what all these words mean. Which, as soon as you come to the answer of somebody saying, I read it, and I read it again, and I read it again, and I read it again, and I still can only guess what it's saying, you know you have a lousy contract. You need to change it, because we should not be awarding contracts that when you read it, and you're reasonable people, you're intelligent people, and you read it, and you can't tell what it says, it's wrong on that basis alone. And someone then starting to explain to you what it says, where you have to have the explanation come from some source other than the document, means it's wrong. And even if they would put the explanation in writing, the correct answer is, now that you've explained it in writing as an adjunct to the RFP, now go back and change the RFP to do what it is that you said in this external explanation that it says, so that it says it on its own face. And that's what we're trying to illustrate here. Here was something that, because it was unclear from the very beginning and should have been caught from the very beginning, but it wasn't. And then there was an improper modification that shouldn't have happened, but it did. And then everything went along. It was audited by the auditors. They said there was something wrong. You had this big impasse, and this was probably, I mean, from my standpoint alone, I probably spent 10 hours or more on just this specific thing. Probably more than 10 hours. Reading it, discussing it, sending emails, getting additional information, poring over that information. And besides me, Gary was involved. Besides Gary, Sharon Gambrell was involved. Besides that, more than one person from the program was involved. Their Assistant Attorney General was involved. The auditors were involved. Mary Jo Childs was involved. My counsel was involved. My procurement analyst, who got this before I did, was involved. You're talking about literally hundreds of hours of effort just to try to figure out what something said, which means it's wrong. So I thought this, although it doesn't come through perhaps as vividly as it will in the future when we translate this, the very fact that hopefully I'm conveying to you how confused this was means it never should have gotten to this point to begin with. And if you don't do things right to begin with, then you're going to encounter the problems where after the fact you have to spend horrendous amount of time and effort trying to rectify things, figure things out, and bottom line, it's much better to simply do it right, do it clear the first time, and not have problems later. So, anything you want to add on?
The final result.
Final result, it went to the Board of Public Works, requested the board approve it as avoidable modification, and the board did, because in so many words, what choice do they have? Their choice is either you approve it and legitimize things, or you don't approve it, in which case you go back to a vendor 3 years after the fact and say, give me money back, when they thought they were doing things properly because of this modification that they thought was okay, because they don't know what the rules are. So that was the result. But it took a whole long time to get to that. And that is our perform class.